We are live, sir.
All right, everybody. This is episode 45 of the Beef and Bitcoin podcast with your host, Brett and CH. Repo Markets. We've been talking about this. For weeks now, I feel like. And we finally got around to recording a quick episode specifically on the Repo Markets. There was a great article written by one of my favorite Bitcoiners, Caitlyn Long. She writes for Forbes occasionally, and she did a really good job of breaking down, what the repo markets are, kind of in layman's terms, and what it necessarily means for the current state of the financial system. And then also she kind of gives her take on it and what it means, and is it kind of indicative of what's to come. And we're going to try to break down this article into just a few small sections and give a little bit of a take on each part. But so to get started, Caitlyn kind of describes the repo markets as that initial plumbing of the financial system. Here's a quick quote from Caitlyn that describes the function of the repo markets. So somebody, probably a big bank, needs cash so badly that it's been willing to pay a shockingly high cost to obtain it. This also means that some big banks are potentially undercapitalized. So you have a bank that needs cash to operate the next day, right? And so it needs some cash overnight. And typically those rates are between 1% and 2%. And recently that jumped to 8% and over that. And some of these repo markets were oversubscribed, and the Fed essentially needed to provide liquidity to those markets so that banks could operate the next day. Like, I don't know how else to describe it. I guess a question to you would be, her assumption is that a large, big bank is potentially undercapitalized and does not have enough cash on hand to operate the next day. What do you think about that?
Yeah, the question is who? Is it part of the U.S. financial system? I know everyone keeps throwing out like Deutsche Bank and other European banks that are just atrocious charts and look completely insolvent. When you look at the chart, it says it all. But the question is there a U.S. bank out there that is seriously having issues, and who is it? Obviously since 2008, banks have been more consolidated. You have Bank of America, Bank of America, Merrill Lynch. You have a bunch of other things that are just, conglomerated. So now everything's so centralized that, one of these guys goes, it's everyone. And as we talked about in the last few podcasts, the Federal Reserve balance sheet bottomed out at $3.759 trillion, and is of now of Wednesday, October 9th, 2019, is up to $3.949 trillion, so just shy of $300 billion. Actually, excuse me, that's $400 billion, isn't that right? Almost $400 billion. Am I wrong? Or 3.759 to 3. Oh, maybe not. So basically almost $300 billion though. It's getting close.
Yeah, I mean, it's growing for sure.
It's growing, yeah. If you see it right now, you realize it's went up a lot relative, especially to the quantitative tightening. What took basically. So the point where we're at now was April 10th of this year, and it took us the rest till August, so 4 months roughly, to bottom out. And then in the span of a month, we regained all that balance sheet that was tightened, or AKA sold off. It's a lot.
Yeah, I mean, and that happens very, very quickly. I don't know if I did such a great job of explaining kind of what the repo markets are, but it's interesting because of the amount of interest, the annualized interest that's charged on that overnight rate, right? So it typically, as I mentioned before, is between 1% and 2%, and then it jumped very quickly to 8%, and I would assume that was because demand for that overnight liquidity really increased because somebody needed it desperately, and it increased what 400%. I mean, that's a lot for the interest rate to kind of increase that much, um, especially when you consider it to be not that risky of a overnight loan that you're expecting to. You post the U.S. Treasuries or whatever at collateral, or those bonds at collateral, and then you get the cash that you need, and you pay a stupid high interest rate. And I think the the shock of seeing 8 to 10% very quickly was kind of what spooked everybody.
It's a spike. I mean, I pulled the chart up, so if you're watching on YouTube, you can see. But even over the long historical period, when interest rates were higher, like from the mid 2000s up until 2007 or 8, when they started cutting, they were those rates overnight. The overnight repo rate was 5-6%, and here in early was it? I think it was actually end of 2018 around Christmas time it spiked, and that was the whole big deal about Powell calling in all the bank heads to make sure everything was okay. Do you remember
Mm-hmm.
that? That was a big
I
deal.
do remember
Was
that.
it or was it Mnuchin?
I thought it was Powell.
It might have been Powell, but yeah, either way, Mnuchin had the meeting. That's what it was. Mnuchin had the meeting with all the big bank heads like Jamie Dimon and co. Um, and that's when the repo rate spiked, and then it just recently spiked again up to 10%, which is absolutely incredible. Um, so it's the question is what's wrong, and who's insolvent is really the question. Somebody knows something.
Right.
Um,
All right, so I'm going to keep jumping back into the article here. So Caitlin then starts going into the rehypothecation, which is really interesting,
mhm.
of U.S. Treasuries, and this is the explanation that she has as why um, these Treasuries aren't exactly risk free, because you'd assume that they were, right? Okay, so here's a quote. For every U.S. Treasury security outstanding, roughly three parties believe they own it. That's right. Multiple parties report that they own the very same asset when only one of them truly does. The IMF has estimated that the same collateral was reused 2.2 times in 2018, which means both the original owner plus 2.2 subsequent reissuers believe they own the same collateral, often a U.S. Treasury security. Um, okay, so that's kind of mind blowing in and of itself. And she quickly talks about how's that even possible, and it's because of a gap accounting rule that auditors can't really use to figure out that anything's uh, wrong, or that there's double counting going on for people claiming that they're owning the same asset. And she kind of likens that to musical chairs. So there's only so many seats, and U.S. Treasury is available, and somebody at the end of the day will be holding the bag when the music stops. So that somebody's going to be holding that debt. Um, and when I think about this, I think about how that's what I really like about Bitcoin, is that, like, I have my keys, so I know that that Bitcoin can't be anywhere else. Nobody else can claim that they own it if they don't have the key. And I think that's where that that credit or debt based economy differs so greatly from an equity based economy. Like, you actually need to have it in order to um, use it as collateral. I don't know. What do you think about that?
um, the rehypothecation thing is something that's interesting. And it's obviously, or not obviously, it's something that's not just an issue with U.S. Treasuries. And I'll get to the Bitcoin part, but it's also an issue with ETFs. There's all these ETFs out there that have claims on certain stocks or whatever, and what happens. That's the big issue is when there's a sell-off in the market. What happens when these things get sold and they have to reclaim all those stocks, in an ETF. You know what I mean? So it's the same thing facing the ETF market as facing the U.S. Treasury market, which is scary because then it's like, well, how many of these banks think they're holding treasuries and they aren't, And even if it's just like 20 or 30%, it's like, well, that's 20 or 30% of a couple $1 billion. It's a lot of money. And getting around to Bitcoin, as you said, the private key things is huge. And as you're mentioning, this is an issue free money creates. It creates these just giant, and obviously this isn't completely just, it's a numbers issue. It's a gap counting issue. But getting at the broader picture here, free money is just piling in here. And now, as we've said before, the Federal Reserve is no longer doing quantitative tightening. They changed it, even though they said they were going to normalize the balance sheet, and that was the whole goal. They never normalized the balance sheet, and so they lied. Of course they did. They always lie. It's not nothing's changed. It's just like the Fed dot plot. The Fed dot plot had, the overnight repo rate would be like 3.5% right now, or 3.25%. Instead, we're back down to what, 1.75, 2% or something like that right now, for the Fed funds rate. So, they have no clue what they're doing. It's an they're just driving an unguided ship right now, but it's more like an unguided missile. That's what it is. And so when you and I are talking about people are, it's a good thing probably most people aren't paying attention to what's going on right now, but they will be soon. That's one of those things, again, it's going to be like 2008, 2009. People aren't going to pay attention until it's like tomorrow, oh, banks aren't giving out money at ATMs. Okay.
Right. It needs to impact you both personally and financially for you to really care.
Yeah.
And I get that. The only reason I think it impacts me right now is because I got so interested in Bitcoin that now all this shit is really interesting to me.
Since Bitcoin touched me.
Yeah, it's like, well, to be blatantly honest, I wouldn't think about it or talk about it if I didn't think I could make money from having the knowledge about it, right?
Yeah.
I mean, it's not, there's nothing wrong with me being honest and saying that. Like,
Leveraging
yeah,
knowledge.
I absolutely intend to make as much money as humanly possible by having a half decent understanding of what's going on around me. Like, that's the whole point. If I didn't think I was going to potentially make money or, change my life for a really, for the better, nobody would waste who's realistically going to be reading about fucking rehypothecation and stuff. Like, it's the most boring fucking topic. But if you can learn enough, there might be an opportunity there to make life-changing money. I don't know. That's the way I kind of look at it. So to me, that's more important than something else that's dumb. I don't know.
The MBA in China.
Right. Like, as funny as that is, it's like,
you know what? It's funny. It's come into our world now because now it's like, well, it just became part of our world because of what's going on. Because it's part of the macro now with Hong Kong, and Hong Kong's part of our, macro talk. But, it's one of those things like, it's like, yeah, some of the stuff's boring, but there's so much stuff to learn here. And it's like, it's stuff that most people don't learn. And it's why, like, you look at America and there's so many issues. Like, most people don't have $1,000 in a saving account. Like 69% of Americans after last study. And it's like, and there's just a bunch of other things, the debt issues, etc. There's so many Americans that just don't understand debt. The credit card issue is a huge issue. It's like people get screwed with credit cards. They're paying like 18 to 29% on credit card debt, and while banks lend, at 2%. So,
right,
it's a frustrating world.
All right, let me move on here, and this is getting closer to the last part of her article. So she also stated, and this is interesting to me, that she doesn't think this is the big one, since the banks can either raise equity capital or the Fed will inject more dollars into the system. So they'll socialize the losses to everybody holding U.S. dollars, essentially.
Everyone who's listening,
right? You, me, everybody who's listening, you bear the brunt of that. It's interesting that she doesn't think this is the big one, and I guess maybe she's right about that, because I kind of thought we were at this point in time like a year ago, and I was wrong. So
I think everyone was wrong. I mean, everyone thought it was world over there. I mean,
yeah. So
we were going to Christmas and the markets were done.
Right. Yeah. No, I remember it was a scary time, and it's funny how quickly things can change and people forget that wasn't that long ago. But also maybe things always take longer than I think. And the repo markets, the beginning of more QE and the 60 billion getting into the market on a monthly basis, buying treasury bills, like that's kind of just, it is what it is. Like maybe that's the beginning of what you're starting to see. And so it's interesting that she doesn't think this is kind of the big one, maybe more of like the ripplings or cracks in the foundation.
Yeah. I mean, it's something. I mean, this isn't normal what's going on right now. I think it's something. Um, and hypothetically, I'd like to think it's good for Bitcoin. I don't know. Um,
Right.
you know, I could be wrong. As I said like earlier when I showed in I think it was the other podcast that even when over basically like $1.5 trillion was pumped into the or one yeah roughly $1.5 trillion was pumped into the Fed's balance sheet in September October of 2008. It was basically from the start of September to the end of November, so 2 months, $1.5 trillion. The markets continued to go down. They didn't bottom till the end of March of 2009. I was watching a pretty interesting TED talk on it the other day, and the guy was talking about there was a huge change in the start of 2007 or something like that, with mark to market accounting, which is a huge. And the SEC had changed that in I think 1938. He was saying under FDR, and they brought it back. So basically, anything like you think about all these companies that had all these mortgage MBSs and whatever, all these houses that their values just plummeted. So they had to market to market. You know what I mean? And
And
so
take the paper
yeah,
losses.
take the paper losses. So they're think about how quickly those losses. If all those houses get cut in half and you're holding $1 billion worth of those treasuries or MBSs, it's like okay, so from 1 billion to 500 million, that's a huge, and the shock that does to the market's incredible. You know,
Right.
so
All right, I want to get into this very last piece, and we had talked about it earlier, but she kind of finished the article saying the current financial system seems pretty fragile, right? And Bitcoin's the opposite; it's anti-fragile. So as these, as what you just said, these big shocks to the current financial system happen, and we can see it kind of teetering. A tweet can move a market now. Whereas when Bitcoin kind of receives these shocks, it just makes it stronger. Even with all the recent news, ETFs getting denied all the time, it's like it just kind of shakes it off and keeps fucking going along. And the big the reason why I think Bitcoin is more anti-fragile than the current financial system has to do with the fact that Bitcoin is an equity-based asset rather than a debt-based asset. So, just like the issue with the treasury bills being so rehypothecated, that's just very difficult to do with Bitcoin without somebody noticing, right? It's more difficult to kind of pull that scheme off to issue a lot of credit on top of Bitcoin because people want to hold their keys, right? They want to know exactly what they have and to know those Bitcoins are theirs, and they can't. They're not anyone else's being used for any other production. So how do you think just an equity based system would function as opposed to a current credit or debt based system?
well, and I'm just reading her part, but her part's about the stability part, and where Bitcoin has the high price volatility, it has the stability on the infrastructure side, or what it is. At least so
Mm-hmm.
far. I mean, it's had the percentage downtime is like it's been up for 99.98% or something like that.
Yeah,
It's
yeah,
some ridiculous number. Um, and then you can look at the regular banking system. The regular banking system is closed. In America, it's open 8:30 to 5 p.m., right, or 8 to 5 p.m. EST, and it's closed the rest of the day. And that's only 5 days a week, and that doesn't include, then you have holidays and you have everything else. So you think about all that downtime to make sure things are running, operating correctly, so you can send your money places or do wire transfers or do ATH or pull money out of an ATM. Um, so yeah, you have Bitcoin, which is up 24/7, 365, which is a completely different system. And this is kind of like getting back to internet money, as Andreas Antonopoulos says. It's something completely new. It's kind of like the internet. There's stuff that's going to be built on top of it. There's stuff that's going to come out of this thing that we never saw coming.
right.
What? I don't know. But and then to point at the current system, yeah, the current system of regular whatever financial markets, yeah, you can contain the price drops. You have you have things like plunge protection team. You have things like central banks being able to distort prices, make sure assets stay up, like the Bank of Japan buying over half the Nikkei 225. Yeah, sure you can keep those up, but at some point, you're going to get one of those like Argentina days where things just drop.
Oh my God. Right, right. I remember
Um,
that.
yeah, it was like 50% or something. So at some point you're gonna get one of those because eventually, you can only, you know, what's it? Eventually the truth comes out. Basically, it's something like that.
Right, right, right.
You can only bullshit so much to a point where the market asks questions. So
No, yeah, I think that's a good point. I, I just think the whole thing's kind of nuts, and she's had to deal with Caitlyn's had to deal with the rehypothecation issues. I thought I heard her mention in a podcast interview maybe a year or so ago about she uncovered that one of the funds that she was working with, like they had shares of Dole, and like nobody had them. A bunch of different funds claimed that they had the same shares of Dole. So the Dole shares had been literally just rehypothecated in the market. So if they thought there were 500 million shares outstanding, there were 700,000 shares of Dole that were on people's books. She's like, how can you even? How does this even happen? And I so like that and her kind of study of Austrian economics led her to understanding Bitcoin much better than
how
most.
long has she been a
Um,
Bitcoiner?
for a couple of years now, but it seems like only the last maybe 24 months that she's been more outspoken about it. And she's getting a lot of really great work done in Wyoming with Trace Mayer for a lot of the pro Bitcoin laws and other laws around property rights with Bitcoin and lien cleansing provisions and stuff like that. So she's doing a lot of really good work in Wyoming for Bitcoin. So that's going to be a place where if you're a Bitcoin business today, you're going to want to definitely set up shop in Wyoming
I land
for.
in Wyoming.
Yeah, I mean, I wouldn't mind doing it. I think it's not such a bad idea. The land's cheap enough as it is, but it's good to have people like Caitlyn and Trace Mayer uh, who are willing to kind of put their reputations on the line and get this shit done for us Bitcoiners who need it to get done anyway. Like you need someone who's going to go and fight for you to be able to fight for your own property rights. And I think that's important. And it's great that we do have people like Caitlyn Long and Trace Mayer to get that done. As I think her speculation is that we transition to an equity-based monetary system that, and I don't want to speak for her, but I'm assuming she thinks that might be built on top of Bitcoin. I guess I'd say the same thing, but it's important that people are working hard to secure that for us.
No, yeah, I agree. It'd be pretty interesting. Went a little off topic, but it is on topic at the same time. Is that Real Vision Gold versus Bitcoin? You know,
Yeah, that starts tomorrow, I think.
yeah, that'll be a good thing to catch up on. I think or watch.
Yeah, we'll
Um,
definitely have some stuff to talk about with that.
yeah, we're always curious, and I know I don't want to add too much more onto this because we're just talking repo markets, but where does Bitcoin? I know because Bitcoin's kind of like country neutral, kind of like gold and silver.
Right.
How does it fit into this global macro we have going now? You know, we've talked about Venezuela, Maduro, Bitcoin, but who else has it? And if they do, what do they plan on doing with it? They just plan on sitting it? You know,
I don't think anybody's going to say anything until number go up, to be honest with you.
yeah,
I mean, I think that would be the safe strategy to hoard, accumulate, tell no one, and wait for, I don't know,
a much higher price,
six much higher price. Like
six figures.
at minimum, but I think six figures might be a little early because that can happen super. That can happen like all of a sudden,
Yeah,
and then yeah, I have a feeling it's a combination of price and time. I don't know if world leaders and the IMF or the UN are ready to discuss like who's holding Bitcoin and who's not from
I
like a
mean, it's going to
like
become
a
a serious issue, like a
oh no
topic in the next year or two,
it,
probably.
it's definitely going to be a bigger topic, and as number go up more it becomes more of an important topic.
Price drives adoption. Here we are
I mean,
again.
yeah,
It's the
yeah,
only thing that matters. If
it
that
really
price is
is.
going up,
Yeah, I like on one hand, like I think this is such a great space, and I'm happy to be in it. But at the same time, it's too obvious to pretend that it has anything to do too much about anything else. If it's going to be adopted, it's going to be adopted because the number goes up, and people want to make money and a profit, and there's nothing wrong with that. Like I'm okay with that.
We are
They don't have
humans
to.
and we are greedy by nature.
Yeah, they don't have to be ideological or a libertarian or anarchist to want to like see Bitcoin go to the moon. They just want it to go to the moon, and everything else kind of follows after that.
Yeah. Log in this bad boy. Let's see where we go.
Yeah, no,
Dun,
it's.
dun,
I like looking at the Bitcoin log chart. It helps put a couple things into perspective that like it's just a series of bubbles over time. So it's the bubble that keeps popping and then growing, pretty much by like a factor of 10 every single time that it does. So exponentially, it's just bubbles popping after bubbles, and the base grows each time. And I don't know. I guess this was a question that I wanted to ask you. Like, do you think when we bottomed at the beginning of 2019, call it like 3,200, do you think it was just the same people who are still here who are like, all right, fuck, like I guess this is the bottom, and they pumped us to 14K? Because I don't think it was any new money that stepped in. I just really don't. I think it was
I think
everybody
it's
who was
just a
left
bunch of the
over,
same
honestly.
people have been just hanging out in crypto Twitter, just like, okay,
Right.
I think this is maximum financial pain. Like, just
Yeah.
buy now. Like, well, like, and I think you're just looking at like, wow, it's come down a fuck ton of a way. It's like, might as well just buy it, when it's way down cheap. And I don't really feel like when you say new money, I know what you're talking about. It doesn't feel like 2017 where a bunch of new people rushed in.
Exactly.
It does not feel like that. Now, maybe there may be bigger hands coming in, but it doesn't feel like a bunch of new, just, smaller retailer coming in.
Yeah,
Not
I don't see
crypto
it
Twitter
being
is as dead as it gets.
Yeah, it's definitely not new retail. I think just because of anecdotal evidence of people reaching out to me and not seeing that many new faces at all.
No,
So
none.
and which is fine. I'd actually prefer that,
Oh
because
yeah.
if we got to 14K with like the 85 people who are left over on like, you know what I mean? It's like
Like
we pumped it that much, like just the very,
literally
very,
that much,
very
and no one
small
cares.
portion of hodlers of last resort. And all the people who get on the train this time around are going to have a lot more reading to do in the next bear market. That all that hard work got done in like 2018 and 2019. Now you can just send everything, every Medium article you need to the people who come along for this train, and you just have a lot more hodlers of last resort for the next time around.
Yeah,
Which is
so
which is
just
good.
in the
Like
base.
that's what you want. Like that base grows. The people who are going to dollar cost average every week or every month is going to grow bigger every time.
Yeah, I'm just
And
wondering, is it gonna look like this? Is it gonna look like where it's like? But see, that took like, so it took from November 2013 to, that's 4 years from that
I
top to
mean,
top.
and I think that 4 year top to top is a good way to think about it, because somebody was kind of saying, don't think about buying any Bitcoin unless you're willing to hold it for like those 4 year increments. Like, don't try to catch 100% move or 200% and bail. Like, hold it for 4 or 5 years. Like, go through a full bull and bear cycle, assuming that's how long that they always will be, which probably isn't the case. But like, let it do some damage. Like, let it do its thing, and then you can start to see like, oh, so this does happen. It does go through a euphoric state and then crash, and then it doesn't die, and everyone's surprised. Like, I think that's the thing that people get in during a hype cycle, and then it crashes, and then you assume that it's like the experiment's over after that. You don't know that this has happened a bunch of times before that.
Yeah. I mean, the cycles before, though, are pretty rapid. At least 2011, 2010, 2000, yeah, 2010. Just, I don't know. I don't really know anything, actually, to be honest. That's what I figured out the longer I'm in this.
Right.
We'll see.
It's very humbling.
It's about as humbling as it gets. But, it's for the better. The less I know, probably better. I'm excited for tomorrow. Maybe we'll record one, maybe after, all this trade deal nonsense. Nice macro. Maybe see where we're at tomorrow.
Yeah, it'll be interesting to see what tomorrow brings.
Yeah. Want to wrap it up here?
Yeah, that was episode 45, specifically on the repo markets. We'll put all the links to Caitlyn's article in the show notes, so you guys can go ahead and take a look at those
Definitely
on your
worth
own.
reading.
Yeah, it's definitely worth reading just to get a better sense of how the current financial plumbing works. Make sure to like and subscribe on YouTube, leave us a review and a rating on Apple Podcasts, follow us on Spotify, send us a DM or a comment on other topics that you want us to cover, and we'll make sure to get it in the queue. All right, peace.
Peace.